What? You get hungry. I think of one minute, even I do with bread because
That's fine.
That is very fine. Century in advance.
I didn't finish the bread.
I even did it on a game at lunch. I don't know why I do it.
No,
Unless someone ate.
maybe the
It's there.
Hello. Hello.
Hello.
Let me resume recording. Plus extensions and how to trade them. Okay. So guys, remember it will take time to practice and master these strategies because they are helping you build your trading plan. Okay. So don't sleep on the information. Always try to practice. Okay. Please take advantage of the free demo accounts offered by your brokers to practice all the strategies we cover in these sessions. Okay. Can you guys hear me properly? Mompari. Hello. Hello, do you guys hear me?
Tukufuna sebo.
Mumfuna screen yange mugiraba. So today we are going to look at what retracements are, what benefits trading retracements provide, okay? What Fibonacci retracements, levels, and extensions are, and how you can use them to get precise entry points and target profit levels. All right, so what is a retracement? You suppose what is a retracement? Let me see. Where is my white screen? You guys can see the white screen.
So
what is a retracement? What did I say? Come on. What? No, you guys can hear. It's like I have another meeting ID. Okay, let me ignore it. You guys can hear. So I would like to go on. So what is a retracement? Okay, a retracement is it's a short-term price correction that happens during an overall larger upward or downward trend. I hope that's clear enough. I'll be demonstrating, so don't worry. Okay. So these price corrections, we know them as temporary reversals. Okay, they do not indicate a change in the direction of the larger trend. Okay, So this method of finding this retracement, and then it's a method of technical analysis. You can use it to find short-term trades. All right. So the main benefit about it all is it provides you an opportunity to profit by entering a trade in the original direction of the trend, at the better price, just before the continuation of the move. So let me demonstrate to you what happens. So let's say we have something like this. Okay, this is a downward trend. Clear? So market moves down, and then this thing here is what we know as the retracement. You've seen it? Okay, everyone is in. Good. You've seen it?
Yeah.
So this is what we know as the retracement, and then so you want to buy here. Okay. So what happens? This is a downward trend. So what about an upward trend? This is the thing. You want to buy here. Sorry, you want to sell from here. Okay. So this is the thing. You know what? in an upward trend. Okay. Price retraces, makes a small correction. This whole move is the retracement. I hope that's clear enough. Let's take it. So let's move a bit forward. So why do retracements occur? So let's assume we are talking of a large downward trend, all right? So let me demonstrate. So we have something like this. Okay. A significant number of traders start to sell, okay, as they believe the market price will decrease. So they start to sell here, okay? And then when they start to sell, this pushes market lower, and as more traders notice the movement, they start selling as well, okay? Okay. So this is what happens. More traders notice and they start selling as well. Okay, so this becomes a strong move. It comes with strong momentum. Okay, now a time reaches, and then when the movement gains momentum, some sellers will decide to take profit. They decide to take profit, and what do you think this will result in? This will result into a temporary buy-off. Okay, something like this. Okay, so some sellers, this momentum, they brought all this momentum, and then some say, oh no, okay, let's take profit here. Okay, so when they take profit, that means they close some of their sell contracts. So this causes this temporary buy off. Okay, and market pulls back for a short bit. So in this whole process, the downward movement is suspended. Okay, now after this, the original forces that formed the trend resume, and their activity continues. So they continue to push price further. Okay, so price continues to fall until the trend has run its course. Okay, so it continues to fall. Yeah. Yes, please.
So at that point that you've circled, is that does that show that at that point that all who are willing to buy? Are they the ones that push
Uh-uh.
the price
No,
up?
no, 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 no.
When I say that the
No,
sellers take profit.
no. That's not what I meant. What I meant is the overall thing is a downward trend, okay? It's a downward
I
trend, okay?
understand, but I'm saying,
Yes.
what causes this kaham here?
What causes this kaham? These sellers, most of them are taking profit, okay? So some of them are like, I'm okay with my profit. So whenever they close those positions, the momentum reduces. That's why we get this hump.
Mm.
Yeah. So
I thought they were like people that they were probably hedge funds or something that pushes the price up. Then after that, the move gets exhausted. But it's okay.
not yet.
I think that
This is just logical, okay? So some people pull out, even if it's you. You have two positions. You close 20 pips here, and then you protect it, and then you continue. So the original forces they come back, and then price continues to fall, yeah, until this trend has run its course. Okay, so it continues. So how do you enter your trade in a retracement? So what for you want to be able to sell here. So the very first thing you need to do, you need to find a strong upward trend or a downward trend, okay, of any given financial instrument. That means any currency pair, okay. Now to find a good entry position, you should look to enter the market in the direction of the trend right after a pullback has occurred, okay. So let me demonstrate this. So if this is an uptrend, we have something like this. Whereas I hope you can see this clearly. So in an uptrend, so what I just explained, something like this happens. So you know some people are closing profit. So price makes this small retracement. So you want to buy here. This is where you want to place your buy order. I'm bad at using this mouse to write, but I hope you can get it. So what do we call this? This is called a pullback. A pullback. Okay. So you want to buy here and then catch all these pips. So remember, these are continuation patterns. If you've been following the sessions, as I explained, let me hope no one is waiting. Okay. So we want to buy pullback, and then in a downward trend, it will be something like this. So we get this. So people, so people take profit here, and then a hump is caused. Okay. So this, in a downward trend, this is known as a rally. This is a rally, okay? But where do you want to enter from? You want to sell here. Is it clear enough, guys, before I go on?
So, Mr. Tamari.
Yes, please.
This time you do not sell breakout.
Eh?
You sell on the pullback.
Yes. We are trying to, using Fibonacci retracements, we are trying to catch those moves. Yeah. Okay. Like I said, as we move much further, we shall find more ways to like get entries, precise entries. So people who use Fibonacci, they want to catch all these moves. Okay. So so a breakout guy would wait for price to break below the previous low, which is this one, and then they sell here, not so? Yes. However, if you're using Fibonacci, you can catch this move, and I'll be showing you how. Okay, sorry about that. So basically, in an uptrend, you're going to buy the pullbacks, and in a downtrend, you're going to sell the rallies. Is that clear? So how do we know when the market will pull back? That's my next question. That's what I'm going to. Okay? And obviously the answer to that is by using the Fibonacci, or what some people call the fibs. All right. So first of all, when you're using Fibonacci, allow me take you to the graphs. Let's switch in between the graphs as well. Mhm. So guys, do you remember this graph? Moza, do you remember this graph?
Which graph?
You've forgotten. Do you
I
remember?
can't see it.
Yeah. Chairman, abantu babaliwa.
Where screen is off.
My screen is off.
Yeah, it is.
Is that why you can't see? Okay, let me share again.
Share.
You can now see.
Yeah.
So
Yeah.
guys, do you remember this graph?
Mm.
This is USD MXN. What do you get a quality?
Yeah.
Hey. Well, exactly what we spoke about is what happened. It broke out of that range and then it is just falling. And by the way, guys, just a reminder before I go on, if you've checked your CFT data already, USD is going to be very strong next week. Has anybody checked CFT?
No.
I'll check. I'm going to check tomorrow.
USD is going to be
Check
very
on
strong next week. So this thing may reverse, test this level by the end of the week. Anyway, that's not what we are here for. So I'm using this same chart to talk about Nemo. Are some people using the old link?
Barabika.
Because it's here telling me the same thing. I think some people are using the old link. Let me post the current link. Okay, I've sent the new link. I think some people are using the old link. You tell them that's the new link you're using. Okay. So when you get a graph like this, so let us, so you want to get a very strong move, okay? A very strong upward move or downward move. So guys, can you notice this? The whole of this move. Mujiraba.
Yeah.
This is a very strong upward move, okay? In technical terms, it can be called an impulse move, okay? An impulse move is, it's more like a larger move in the direction of the trend, okay? So, and then what in those similar terms, this is called the corrective move. The corrective, in case you're dealing with waves, I won't teach you guys wave theory because I don't think you need it. But in wave theory, this is what it's called. It's called, this is an impulse, and then this is the corrective move before you get the next wave. Okay, so let me use just simple whatever. So if you want to trade with fibs, what do you want to catch? You want to catch these pips. Are you seeing these pips? This move from here to here. Okay, you can use fibs to cut because this is a retracement, isn't it? Based on what we've been learning,
Yeah.
this is a retracement.
Mm.
This is the overall move, and then this is the retracement. So you want to catch these moves. So let's. So first of all, in order to do this, you need to identify 2 points. One of them is known as the swing high. The other is known as the swing low. What is a swing high? A swing high, it's the highest point displayed on a given time period. Okay. So in this case, this is the highest point, isn't it? And where is the lowest point? Where did this move begin from? Okay, let's say the whole move began from somewhere around here. Okay. Sure. I hope I'm right.
Yeah.
So a swing low. This one happens when a low is lower than any other point on a given time frame. Okay. So this is your swing low. This is your swing high. So what you want to do, you want to go to the fib retracement tool, and then you draw a line. You drag a line from here to from the swing low to the swing high in an uptrend. In a downtrend, it would be the vice versa. Okay. So let me remove this. I don't want us to get confused. All right. So always you find the tools on the left. So this is where you find them. So it's here. You guys can see it. This is the fib retracement. Select it, and then I'm going to drag from the low. Let me say from here up to the highest point, which is here. All right. Have you guys seen that? So this is best done using, obviously, a laptop. If you're on phone, it's going to be really difficult to do this. Now, now, let me talk about, now when you draw this, you're going to find levels. You're seeing these levels that are marked out. These are the fib levels. These are the Fibonacci levels, okay? They are automatically calculated by the trading platform. Trust me, you don't know the history of the Fibonacci. Who wants to know? I can talk about it as well. Hello? Hello? Daisy, you're welcome.
Hello?
Hello? So guys, hello? More data. All right, so
Yeah, we can hear you.
So you're going to find levels like this. Okay, so these are the levels, these are the fib levels. We shall talk about Fibonacci, the history, another time. So the horizontal lines that occur, these ones, are you seeing? They have some numbers. So these are the numbers we're going to look at. Okay, so the most popular retracement levels are 38.2. Should I write them? No, just keep saying them until they stick to your mind. There are only 3. So there is 38.2, there is 50%, and then there is 61.8. Okay. This is 50%. In these terms, it's identified as 0.5. Maybe if you modify the settings on your platform, it will bring the 50%. So 0.5, that's 50%. 0.382, that's the 38.2%. Okay. And then 61.82 is this one, 0.618. Okay. May I have it in terms of, in like basic terms? This is, when you simplify it, this is it. This is it. And this is the golden ratio, 0.618. This one and this one are the strongest, okay? So, but we like to consider the 50% and the 61.8%. Let me zoom in. I hope you guys can see it clearly. This is 50%, this level. This is 38.2, and then this is 61.8. Is that clear?
Yeah.
Okay, so in trading view, we have the fib retracement tool. It will place these levels on your chart, okay, based on Fibonacci numbers. So it places support and resistance levels. So these levels, they can act as support and resistance levels depending on the trend you have on your chart. All right. So guys, there are many theories, mathematical equations and strategies out there that try to make sense of a market that's largely speculative. However, what you need to know is that it's widely accepted among most traders that largely rely on technical analysis, people like me and you hopefully, that most of these moves, they'll retrace around the fib levels, these ones, especially the 50%. So you want to watch out for the 50%. However, in our case, we want to look at 38.2, 50%, and 61.8. Okay, so let's begin with an uptrend. What we have is an uptrend. So let me try to, just a moment. Can you guys see the screen, the whiteboard? You guys can see the whiteboard. So in an uptrend, it
Yeah,
will be,
yeah.
I'm doing it again. So this is an uptrend. Okay. This is the thing. This is the pullback, the retracement we're talking about. Okay. You want to buy from here. Okay. You remember? You want to buy from here. Huh. Okay. And then in a downtrend, you want to catch the sell from here. Okay, you want to sell from there. In an uptrend, you want to buy from here. So don't forget. Okay, so in an uptrend, the price will retrace down. Okay, a certain percentage of the move before continuing its upward movement. Okay, in a downtrend, price will move up a certain percentage to form this retracement. This one. The overall thing is bearish, okay, but it will move up a certain percentage before continuing its long-term downward movement, okay? So guys, please note, if price moves beyond the 50% Fibonacci retracement level, it might be a signal that a trend reversal is bound to happen, and it might be an opportune moment for switching the direction of your next trade. What do I mean here? If this thing goes beyond, if it retraces beyond beyond the 50%, a reversal is different from a retracement. A reversal means the whole trend is likely to change its course from maybe an uptrend to a downtrend. Okay. Remember, so let me go back to the chart. You guys can see the chart now.
Yeah, we can.
So the difference between a reversal and a retracement is, if this was a reversal, it would go well beyond our major points, okay? So let's mark our major points. We have 50%, which is here. I've put the line, and then 61.8, which is here. But usually, if you with time, if you want to stick, if you're sticking to this, let's say this move happened, it came all the way down to up to somewhere like here. Okay, let's say it stopped here. Now this is likely to be a reversal, meaning this whole trend is likely to go into a downward trend. Why? Because it has surpassed all the major levels, fib levels. Is that clear? Okay, that's clear, I hope. But if it stops around maybe 61.8, 50% or 38.2, then we are confident. We wait for a confluence signal that price continues in the general direction. Okay, so that's where things like price action come in. Guys, read price action, you're going to be studying candles. So when we look at this, guys, I may have to do this thing. I may have to do this thing in 2 sessions, if you don't mind. Maybe one today and maybe one tomorrow. So when you look at this thing, guys, let's look out for these levels. 38.2. Do you realize that price retraced exactly at 38.2, which is here? Is it clear?
Yes.
Let me make it green. Are you seeing this point? Price retraced around 38.2 level. Okay, so having noticed this, we would wait for a signal to buy. Okay, okay, what I mean is, by a signal, I mean you look for a sign. Okay, it has retraced. Now when it retraces, when it does this in an uptrend, this becomes your support in an uptrend. Okay, this level becomes your support. And it's very magical. Remember, we already drew these zones. This is why I brought back this analysis, because it still holds. I realizing that it reacted. We're using Fibonacci tools, but again, you can see that the supply zone, sorry, the demand zone we used in this range, it's still holding up to now. Okay, so price retraced here. So you see that. So here you would zoom in and then look for, maybe, let's say if you're using price action, a candle pattern. So here, okay, I see I have a double candle pattern. One is engulfing, the bullish candle is engulfing the smaller one. So which means the trend is likely to continue. Is that clear? So maybe let me draw this again. Let me delete it and do it again. Those of you who missed out, you will see how we use the tool. So here it is, fib retracement. So now let me show you something else. Let me try to, we use this point, remember, okay? So let me say I take a different point. This point, let me say I begin from here. Can you see this? This is also a low point, isn't it? You guys can see?
Yeah.
So let me drag from this low point up to the high point again. I stop there. Clear? So look closely. So this time I've used a different point, a different low, again to the same high. And what do you notice? Price retraces again, but this time around the 50%, the 0.5. Is it making sense?
Yeah.
Make sense? Let me try to draw a horizontal line here, from here across. So so basically, what these fib levels, they are kind of accurate, by the way. So if you see it around 50% or 61.8, if you see it resisting around there, price is likely to continue in the overall course of the move. Okay, so but if it breaks below those points, then it's likely to be a reversal and not a retracement. So guys, now I want to ask you, should I wrap up this session with the second one right now? Because that would save both of us time. That has just been like an introduction. So should I wrap it up in another Zoom session? It's up to you guys. You tell me what to do. Or we do a different one tomorrow, or I don't know. You decide.
I'm thinking, Mr. Tamari,
Yes, Chairman.
we just vote. Democracy.
No, you guys,
Apparently, I'm thinking of a bullet starting in around 5 minutes.
You want to do a bullet?
Yes.
Okay. What about the rest?
I think Tamali.
Yes, please. You also want to
I
do
think
a bullet?
you should.
Yeah? That's wait, let me see the members in the chat. Yes, Arthur, what should I do?
I think you should just dictate and do what you want. Because if you are to vote now, what if you are to vote, how will you? I don't believe in democracy.
I'm saying
Dictate.
Patricia has just joined. Patricia, you're welcome.
Hi, Patricia.
Mr. Tam,
The thing is, if you've just joined, it's going to be difficult to hook up unless you go through the previous. Yeah.
Mr.
Yes,
Tam,
Wanji?
I think we should do another Zoom tomorrow about this thing.
So I think let's do another Zoom tomorrow because some of you have joined late. You probably need to go through.
Yes, at least those ones. Those of this today, they should first catch the recap of this one.
Okay, then. So
that tomorrow we are all starting on the same platform.
I'm going to send the recording to the group. So enjoy your evening.
Okay.
The session has ended.
Okay, Mehdi, our deal.
You first wait for the bullet to end. Wait for the bullet to end. And don't run away.
I'm not running away.
Kari. Good night, everyone.
Good night.
It has been good.